Welcome, everybody, and thank you for joining us today to hear about green finance and climate risk mitigation in India, which is such an important topic, not just for India, but also for the rest of the world, given the size of India's population and economy. I'm Maxine Nelson from the GARP Risk Institute, and I will be your host today. Before we start, I'll give you some tech tips. Now, if your screen freezes, press F5 to refresh. For any technical difficulties, you can troubleshoot by clicking on the yellow help icon on the bottom of your console. You can type any questions into the Q&A box and download slides by clicking on the green page icon on your console. You can also resize any windows by holding down and dragging the bottom right-hand corner. So now let's get onto the main event. First, I'm going to hand over to IIBF for some introductory comments. Over to you, Soumya.
Yeah, thanks, Maxine. Hi, I'm Soumya. From India Digital Banking and Finance. Just a brief introduction about the two institutions. Needless to say about IIBF, it was established in 1928, and IIBF has emerged as a premier institute in banking and finance education for those employed as well as those seeking employment. IIBF offers a bouquet of courses which cater to varied levels of management in banks. It has been continuously reinvesting itself by offering diverse and contemporary subjects in the banking and finance domains. This has helped the industry professionals to sustain their professionalism through continuing professional development. The Global Association of Risk Professionals, GARP, is a non-partisan, not-for-profit membership organization focused on elevating the practice of risk management. GARP offers the leading global certification for risk managers, the Financial Risk Manager, which is the FRM, and the Sustainability and Climate Risk Certificate. It also offers ongoing educational opportunities through continuing professional development. IIBF and GARP have collaborated to offer the Financial Risk and Regulations course, that is the FRR of GARP, to IIBF members. As a part of this collaboration and IIBF's member education series, a contemporary topic has been organized by both the institutions for spreading awareness amongst the bankers. Of today's webinar is Green Finance and Climate Risk Mitigation in India.
As I'm sure many of you are aware, that India has the second largest population in the world, and according to the UN, it's expected to surpass China's population within the next year. It's also one of the world's largest economies. And so after decades of population growth and economic development, even though India's per capita emissions are very low, India is now the third largest emitter of greenhouse gases in the world. Now, on the mitigation side, India has added a lot of clean energy capacity over the last several years in support of its Paris Agreement pledge, which now ranks at third in the world for total renewable energy that's been added. And while many organisations in India have taken steps towards achieving net zero, there's still a lot more work to be done to support carbon reduction and climate risk mitigation. Now, this is important because not only is it now having a large impact on the climate, but India is also among the countries that are most vulnerable to climate change due to its geography and the dependence on agriculture. So we're very fortunate that we've got these esteemed speakers today to give us insights into the current thinking. So we're going to start with a regulatory perspective, move on to an economic perspective, and then I'll take a step back to the global perspective, and then we'll open up the floor to your questions. So to start today's thought-provoking discussion, we'll start with the regulatory perspective. And I'm very pleased that we have with us today to speak Mr. Sunil Nair, who's Chief General Manager in the Department of Regulation at the Reserve Bank of India. He has a long distinguished career as a central banker with a wide range of experience in policy and regulation. And he's worked at the Reserve Bank in many different capacities. So over to you, Sunil, for your insights.
Thanks a lot. Am I audible?
Yes.
Yeah, a very good morning and good evening to my co-panelists and participants, depending on whichever part of the world where they're joining in. Firstly, I would like to thank IIBF and GARP for giving me an opportunity to be a part of this webinar on green finance and climate risk mitigation in India. Climate risk and sustainable finance have been engaging attention of regulators, national authorities, and supranational authorities the world over. There is also now a growing realization that climate change financial risk pose both micro and macro concerns. In view of this, as you are already aware, Reserve Bank of India set up a sustainable finance group in the Department of Regulation, which I am heading, in May 2021 to effectively look at the aspects relating to the risk emanating from climate, as also to lead the regulatory initiatives that can be taken in this area. Further, to learn from the global, learn and contribute to the global efforts, Reserve Bank of India became member of Network for Greening Financial System as a member in April 2021. We are also part of various other regulatory bodies like Basel Committee on Banking Supervision, Financial Stability Board, International Platform on Sustainable Finance, to name a few. And we have been contributing in our own way to these international standard setting bodies or international organizations, and we are trying to learn from them. In this endeavor, as you're already aware, Reserve Bank of India came out with a discussion paper on climate risk and sustainable finance on July 27, 2022. The discussion paper, like other central banks across the world, focuses on aspects like governance, strategy, risk management, disclosures, scenario analysis, stress testing, and stuff like that. Additionally, we carried out a survey of the scheduled commercial banks across the country, the leading 34 scheduled commercial banks in India, which was carried out in the beginning of the year. We published a survey report also, which gives us insights of what is the thinking of the Indian commercial banks vis-a-vis climate risk and sustainable finance. So put these things together, the discussion paper as well as the survey has given us an insight. The discussion paper is open for comments till September 30, 2022. We would appreciate the stakeholders as well as other members who are interested to go through this paper and give their valuable comments and input, so that it will help us in taking lead as far as the initiatives which can be taken in this direction. Now, trying to give a little bit of flavor in terms of like what is happening globally in terms of growth and development of green financial products and the markets, and how is it supporting the achievement of net zero goals. Now, I'm trying to talk from the perspective of the regulated entities which we are regulating, that is banks, non-bank financial companies, and financial institutions. Though the regulatory entities on their own cannot bring about a drastic change, but they can definitely do a little bit on their side to help the clients and help them achieve the net zero transition net easily. Now, if you are to look at globally, some of the banks like JP Morgan, Bank of America, HSBC, Citibank, Stancy have set ambitious financing targets in billions of dollars for 10 years from 2021 to 2030 to help address climate change and contribute to sustainable development. In recent years, like global banks have come out with varied kind of products, be green deposits, green loans, sustainability linked loans, and stuff like that. In India, closer home, if you have to look at, many of the banks in India have started offering green deposits. They have started offering green loans. They have started offering sustainability linked loans. And the entire endeavor here is to achieve that net zero goal is a target. Now, if you look at the bond market in 2021, I think the sustainable bond issuance was $1 trillion, which was spearheaded by the green bond issuance, and which saw a 20x rise from 2015 and accounted for 10% of the global debt market. To walk the talk globally, banks have set net zero targets, and so has been the case in India. Some of the banks like State Bank of India, HDFC Bank, and Yes Bank have taken the lead by announcing the net zero targets like 2030, 31, and 32. Globally, some of the banks have joined alliances like Net Zero Banking Alliance and Glasgow Financial Alliance for Net Zero. So I would like to add here that these entities definitely, financial sector definitely has a key role to play in financing transition to net zero world. And the growth and development of green financial products and markets would definitely help in supporting the achievement of net zero goals. Coming to the second part, like what are the perceptions of green investments among the Indian banking sector? I think, as I alluded a little earlier, we carried out a survey of the 34 scheduled commercial banks in India, which gave us insight as to what they think about climate risk and sustainable finance, and what is their thought process in terms of the products that can be offered on the liability side as well as the asset side. Most of the banks have indicated that they would try to reduce the exposure to high carbon emitting or polluting businesses in coming years. They are also looking in terms of tapping the opportunities for climate change, and some of them have already launched green deposits to raise resources. Some of them have started offering sustainability-linked loans. And in these endeavors, some of the banks have started looking at the capacity building exercise, because there is a need for the adequate personnel with specific skills who can understand climate risk and try to capture that when they are trying to lend or invest. They're also looking at from the disclosure perspective. Now, having said so, the Reserve Bank of India has done a lot. May not be directly related to climate risk, because in India we have a concept of priority sector lending, where they are allowed to lend to renewable projects, lend for installation of standalone solar agriculture pumps and solar power plants and stuff like that. And the numbers here indicate that outstanding bank credit for renewable energy sector under priority sector lending had grown from 1,315 crore as of June 19, 2020 to 3,868 crore as on June 17, 2022. In India, FDI up to 100% is allowed in renewable energy sector under automatic route without any prior approval. With an encouraging policy framework, the year 2021 saw a sharp increase in renewable energy investment in India, with investments of $18.8 billion in renewable energy. That is about 3x investments in 2020. So as a whole, banks are looking to reduce the exposure to carbon emitting or polluting business, and they are trying to adopt gradual and non-disruptive approach to transition away from such business, keeping in mind the developmental imperatives of the country. Now, coming to the aspect as to what are the challenges and the opportunities which Indian banks face, again, our survey gave us insights in terms of three major concerns there. Availability of skilled human resource is an issue. Inadequate data is an issue. There are difficulties in measurement of climate risk. Though some of the banks have started setting up a separate, most of them have not set up a separate business unit or a vertical, but they are looking at from that perspective. They are yet to integrate climate risk into the risk management framework. Now, having said so, India does not have a taxonomy of its own. Like globally, you have Europe as well as China has a taxonomy of own. India doesn't have a taxonomy of own. It's a work in progress. So once that is in place, I think it will get a lot of boost. Now, coming to some of the specific initiatives which India has taken, like as you're already aware, on August 3rd, 2022, the Union Cabinet has approved India's updated national determined contributions, and which now is committed to reduce the emission intensity of its GDP by 45% by 2030 from 2005 level, and achieve 50% of cumulative electric power installed capacity from non-fossil fuel-based energy resources by 2030. Now, achieving these targets is a huge kind of task, and everybody has to pitch in, be it financial institutions or be it markets. They will have to do a lot. So that is again a work in progress. But I already highlighted that there are certain issues which banks are facing in terms of capacity building, in terms of measurement and stuff like that. Now, in terms of the quantum of amount, I think Council on Energy, Environment, Water did a recent study where they estimated that India would need 10 trillion to achieve net zero by 2070. And these would span across sectors like power, industry, and transport sectors. And they had estimated that there would be a shortfall of investment of 3.5 trillion for this net zero ambition. Banks can definitely play a vital role in this regard. They have been taking initiatives, they have been taking lead, but more needs to be done in this area. Now, coming to another aspect as to where does India stand in terms of scenario analysis and stuff like that, I would like to highlight the fact that in the discussion paper, we have a specific aspect where we have highlighted as to what is the bank's take as far as scenario analysis and stress testing is concerned. Where do they stand, and what are their thoughts or what is their take on that. We expect a feedback from their end. Reserve Bank of India is internally trying to assess as to how to do the scenario analysis, and we are looking at European Central Bank, Bank of England, and other central banks who have done a lot of work in that area, and taking a cue from that, we will be definitely taking it forward, because we have given as a part of commitment to NGFS that scenario analysis would be one aspect. So we are definitely, that is definitely something which is on the radar. But having said so, we would expect the stakeholders to respond as to what are their views or what is their take on stress testing and scenario analysis. So to conclude, I would say that banks and financial institutions are the backbone of India's economic growth, and their support in transition of real economy to net zero emission is well recognized. As country pivots to a green future and sustainable growth, the banks and FIs will have to accelerate their focus on greening the Indian financial system. However, having said so, the challenge before us is to mainstream green finance, think ways and means to incorporate climate risk and ESG-related considerations into commercial lending and investment decision, while simultaneously balancing the needs of credit expansion, economic growth, and social development of the country. Climate risk and sustainable finance being an evolving area, banks and financial institutions would do well to pay greater attention to the associated climate-related financial risk and continuously develop their capabilities and expertise in this area. I'll stop here. Thanks a lot.
Great, thank you. That was a fantastic overview. You covered a lot of ground, from your recent publication to kind of where you're going in the future and the expectations for banks. So one of my takeaways was that the expectations are continually increasing for both capacity building in banks and for banks to help mainstream green finance, and these challenges will continue. So I will now, I think Mr. Das hasn't yet rejoined us, so we will continue looking at the next aspect.
Am I audible?
Oh, yes.
Maxine, Mr. Das has joined.
Oh, great. Yeah, okay.
Am I audible?
Yes.
Right.
He has joined because of some connectivity issues. So you can see him and you can hear him.
Yes, we can see both of you. Great. So I think you're going to say a few words beforehand. So over to you to say a few words now before we go to the economic perspective.
Yeah. Thanks, Maxine. Actually, this UN Climate Change Conference of the Parties, COP26, held at Glasgow. So Reserve Bank of India is also assessing how to limit the global warming and likely to set more ambitious climate action plans for the Indian financial told. And he is in the forefront of all these activities done by this Reserve Bank of India. So in the words of UN Special Envoy for Climate Change and Finance, Mark Carney, every professional decision taken climate change into account. That is where we stand now. And now in the process, what has happened, it is not just the technology. The sustainability will be the key drivers to the growth in the future. So from the goal of every organization has to change from profit, people, planet, to planet, people, and profit, the 3 Ps of the sustainable finance. So perhaps who is in a better position to decide on these changes which will be happening to the financial sector other than Dr. Ghosh, who is representing State Bank Group. And State Bank Group manages close to 25% of the banking sector. And over to Maxine. Thank you.
Great, thank you. I think that was a fantastic introduction to as you say, to Soumya Kanti, who is the Group Chief Economic Advisor of the State Bank of India. And as you said, they account for such a large proportion of the lending in India. And Soumya has had a range of roles in other organizations as well, has been visiting faculty at a number of high-profile universities, been involved in a lot of research, has been ranked in the top 3 by Bloomberg as a professional economist for correctly predicting the future trajectory of macroeconomic variables. So I think this will be a fascinating discussion that he's about to give us, or insight into his views on the economic perspective of climate change in India. So over to you, Soumya.
Thank you, and thank you both the institutes for giving me an opportunity to speak on this topic. Although I will admit that I don't have much expertise in this area, but I can give you some economic perspective, the way that things are moving and way actually the numbers are stacked up. So once again, I would like to thank both the IIBF and GARP of providing this platform and this great initiative in terms of understanding the future of the green finance market in India and also globally. So, and just a small clarification, I think as we are in a digital world, we keep continuously uploading our profile. So my latest profile can be on LinkedIn. So just for a small update on that. So having said that, let me now take you through the presentation. I'll quickly go through the presentation and some numbers I would like to share in front of you, which is actually very important. The first thing is that if you look into the India's climate profile, the total greenhouse emissions, excluding land use, change and forestry, was around 2838.89 million in 2016. Per capita is around 1.96 in 2016, but the world is around 6.55. The key emitting sectors in India is energy, transportation and construction. If you look at the sector-wise contribution, energy contributes 75%, so that is the largest, and agriculture around 14.3 and waste is 2.6. The climate risk for India, and this actually has been a recurring phenomenon in Indian context. I think there has been floods, droughts, heat waves, cold waves and cyclones, but as all of us know, I think the Indian context also, there has been the unseasonal rains in India has been a part of the last couple of years. We have been getting rains when when it is not scheduled, and we are getting rains when it is scheduled. So basically this year, of course, the monsoon has been good, but this has been a recurring feature. And the vulnerable sectors are agricultural, food, water, coastal, health, forest, and other natural ecosystems. So if I go to the next slide, please. India's average temperature has actually risen by around 0.7% during the last 117 years. So that's a number which all of us need to appreciate. By the end of the 20th century, there are projections which say that the average temperature of India could rise by around 4.4 degrees Celsius, which is related to the recent past. By the end of 21st century, the frequency of occurrence of warm days and warm nights is projected to increase by a massive 55% and 70% respectively. And the frequency of summer heat waves over India is projected to be 3 to 4 times higher by the end of the 21st century. So I think all these numbers show that the climate change in India is actually an issue which we have to deal with. And this is an issue which I think all countries are dealing with right now. We are witnessing one of the worst droughts in parts of the Europe, and I think no country is immune to such climate change, and that is going to get more severe as we progress towards the 21st century. Next slide is basically some of the changes. For example, the Indian water, I will again give some numbers over here. The sea surface temperature, for example, that is risen by 1 degree Celsius. There has been changes in rainfall. The summer monsoon precipitation over India has declined by around 6%. There has been droughts. I have said this in the beginning. And tropical cyclones also, there has been a significant reduction in the annual frequency of tropical cyclones since the middle of the century. But very severe cyclonic storms have increased significantly during the last 2 decades. And this is actually an interesting phenomenon in the Indian context. In the last couple of years, we had severe cyclones in states like West Bengal. We have severe cyclones also in the states like Maharashtra. So basically several parts of Odisha also. Tamil Nadu. So there are several parts of India. There has been the cyclone storms has increased significantly, and I think that is also a matter of concern. Now, if I go into the next slide, this is a sector-wise emissions. As we can see that the CO2 emissions account for around 79%, methane emissions around 14%, and Indian emission intensity of gross domestic product, however, has reduced by 24% between 2015 and 16. If we go to the next slide, what is the transitional risk, the current policy trends? As all of you know, India is implementing the largest renewable energy expansion program in India. So there is and more than 366.7 billion LED bulbs, LED tube lights, and energy efficient funds have been distributed under the Ujjwala scheme. This is a paid scheme of the government of India. The street lighting national program, more than 11.25 million LED street lights have been installed. This basically reduces the demand for electricity in general. And this FAME program, the foster adoption and manufacturing of electric vehicles, India has actually gone into some sort of an overdrive in terms of adoption of electric vehicles since April 1, 2015. The scheme has actually, it's taking off. It's a slow progression in a developing country like India, given the infrastructural concepts. But this is basically, and one of the risks over here is the technology risk in the safety of the battery. And there has been some instances whereby there has been instances of battery fire. But this is one area where India is actually progressing very fast. Next is the direct impact on banks. If you look into the sector-wise fossil fuel intensity by sectors, the cement sector actually accounts for around 29%, and the share of the electricity generation in outstanding bank credit was at 7.5% in March 2020. This number has not moved up significantly. As all of you know, that 2021 was a year of pandemic, and 2022, this figure has marginally gone up. And there exists a wide variation across states in terms of banking sector exposure to these sectors. The direct exposure of the banking sector to the three fossil fuel industries is not alarming. However, because the combined share of electricity generation, chemical and automobile is only around 10% for public sector banks, around 9% for private banks. So if you look at the direct impact on banks, it is not that significant at this point of time. Now, if we go into the next slide, the sector which have high input, I have said cement, basic metals, paper and textiles. There is a need to closely monitor also the industries that have low interest coverage ratio. So, and high GNP ratio and high energy input intensity to prevent spillover to banks. This is one interesting conservation which you need to have. Now, what are the green finance project and risk? I will have some numbers. If we have time, we will discuss the numbers when we have the discussion, when the question answer session. Investment of around 10 trillion is required to achieve net zero by 2070. There are some estimates which says that India requires 17.8 trillion to attain net zero level. There are estimates by Industry Association which said that India could require around $20 billion worth of investment every year to achieve its climate targets. India's climate action are largely financed from domestic sources. However, technology transfer remains a pressing issue. So I think the fund requirements for transition to net zero is a humongous number. There are different estimates. I have also some other estimates in front of me. But one number I would like to point out, which is not in the slide, is that emerging markets needs around $95 trillion to help them transition to a net zero economy by 2060. And India requires around 17.8 trillion for the purpose, as I said. Now, so this is a huge number. So next, if you if we just look at the green finance taxonomy, I'll not get into all this. It's a social bonds, sustainability bonds, sustainability linked bonds, transition bonds, green bonds. So basically, these are all slides. And what are the impact on banking? Social bonds could be a role in housing. Sustainability linked bonds could be overlap with banks' lending policy. Transition bonds could be a bank of the bank non-SLR portfolio. Green bonds. So there are several green bonds which could be used, and I have just giving an example. Next slide is basically on the non-budgetary resources of the green finances. As part of the green finance, I think this was just discussed. I'll just take around 2 minutes more. The Reserve Bank had included the small renewable sector under the priority sector lending in 2015. This figure is going back. As of today, the number is around 365 billion. So if you divide it by 80, you will get the corresponding US billion figure. India has started green bonds since 2015. In 2021, India issued 6 billion of green bonds. Most of the green bonds since 2015 have maturities 5 years and above. The cost of issuing green bonds in India has remained on the higher side. But the important thing is that green bonds are used by the public sector units in India, corporates with better financial health. And this is one trend which has been slowly picked up in India, thanks also to the RBI initiative, whereby it has pushed it under the priority sector lending scheme. Next is basically the opportunities in India: green hydrogen, renewable energy projects, electric vehicles, city gas distribution, and ethanol blending. These are all 5,500,000 gigawatts, electric vehicles, city gas distribution, ethanol blending. These are all opportunities for the green finance in India. And I think these are very significant in the next 5 years. You can all see that the target, India has already achieved the target of ethanol blending ahead of the schedule. And in the next, I think by 8 years, the target which the Indian government has set are very ambitious in terms of the green finance opportunities. What are the other risks over here? I think there is a risk, as all of you know, is of counterparty risk. Basically, payment delays. Infrastructure risk is one of the risks in a developing country like India. Generation risk could be there. Investment risk could be tariff bidding. Competition with global investor. Construction risk. Commodity risk, as all of us know, that the commodity cycle has become very volatile. And the supply side risk, basically customs duty on solar modules, given the fact that we are increasingly being embroiled in an economy or in a global economy whereby protectionism is the order of the day. So, and finally, if you look at the electric vehicles, the infrastructure risk is one of them, adequate availability of charging points, the fire risk, the alternatives are CNG-based vehicles, risk of grid overload, technology risk, ethanol blending. Also, there are risks which are supply risk, regulatory risk, and safety hazard. So there are risks which actually talks about all these things. Then in terms of the other green finance risk, other is basically if you look into the city gas distribution or the sourcing of gas, the domestic gas sometimes is not sufficient. Import dependency result in price and foreign exchange risk. There's the project execution risk, skilled manpower, the inventory management, which is very critical for consistent supply. There is also the regulatory risk. For example, priority in domestic supply of gas and pricing for CGD, multiple clearances are required. Green hydrogen also, there is this production cost, transportation and storage cost, nation state infrastructure risk. I think all this green finance, which India has a very ambitious opportunity, there are risks involved, but of course there are significant opportunities which I'll just slowly say going forward. Next, I think what is the regulatory landscape? I think India has already joined the IPSF in October 19. The Reserve Bank have joined the NDFS in April 21. Our discussion paper on climate risk is already on the RBI website. The sovereign green bonds are the part of the government overall borrowing program announced in this budget. I think this is a very good initiative. And IFSC, a guidance framework on sustainable and sustainability lending by financial institutions, IFSC. So I think these are some of the emerging regulatory landscape. I think the government of India and the Reserve Bank of India are fully cognizant of how this green finance scape architecture is going to evolve in the coming days, and they have been actually ahead of the curve in terms of being member of the associations, central bank associations, and also some regulatory policy changes, which is important to take this initiative forward. Then also there are some issuance of challenges. I think over here there is an absence of an universal definition of green finance over here, which often results in greenwashing. The existing literatures, there is a suggested the reduction in the asymmetric information could pave the way towards sustainable long-term economic growth. This has always been the case in terms of some things which are important to us. Data sometimes is important for integration with Basel III. Methodological challenges to estimate the emissions in Indian context. Consumers' willingness to pay higher price for the green products. I think this is a very important point. Long-term nature of green source energy may aggravate maturity mismatch for banks. There are relevant financial instruments there has to be a need to promote instruments such as green equity, green deposits accounts. For example, as all of you know, in SBI, I will talk about a little bit of SBI initiatives, the largest bank. We have a system whereby you can walk into the bank in a green channel and withdraw money from there. Manpower training and multiple compliance requirements with many types of substances. So these are issues and challenges. And as I've said to you also in the beginning, some risk, but the opportunities are also huge in this context. I'll just mention some of SBI experience in green financing before I stop. We are the country's largest bank, and these are the finance to renewable energy sector in the world. These numbers are in rupees crore. So this in rupees billion should be around 197 to solar. Total, we have invested around 324 domestic rupees billion. So around US 4 billion is the total SBI finance to renewable energy sector in India. There are lines of credit, the World Bank 620 million, 480 rooftop solar projects have been sanctioned. The German Development Bank has done 177.3 million, US dollar 277 billion supporting energy efficient housing projects. In fact, we are also a part with the World Bank in these grid connected rooftop solar projects in India. And the European Investment Bank, which has given out 214.3 million supporting grid connected solar PV projects. So I think these are some of this important credit which are being given for supporting green projects. And the SBI is also a stakeholder in some of these lines of credit, at least with the world, at least as I understand with, for example, with the World Bank is concerned. Finally, SBI in green financing, we have adopted a green bond framework. We have made 3 issuances of green bond aggregating US 800 million since 2018. So we're already over there. SBI has decentralized a processing cell to process all the loan application for solar projects as well as household. This is one area where we are very aggressive. We have also given mandate to e-rickshaw scheme. So that's actually an initiative towards environmental friendly mode of transport. And finally is that we are financing solar pump sets. Solar pumping systems serve as easy to use, cost effective and sustainable alternatives to conventional pumps. So to end over here, I think this is a new area, the green financing in the Indian context. But I can tell you that the Indian regulatory infrastructure, the Reserve Bank of India, the Government of India, as also the commercial banks are getting more accustomed to this transition to an green economy in the next 5 years. I think some of the targets till 2030 are very aggressive. But beyond that, I think the important point is that the mobilization of funds for that purpose. The numbers which I have quoted is that India needs around US 17.8 trillion and the emerging markets need around 95 trillion. So that's some numbers which we have to work with and to see that we are able to achieve our targets in accordance with the global best practices. Thank you. I will end here.
Thank you. There were some huge numbers in there about the amount of investment that's needed. And then another huge number in there that struck me was the amount of LED bulbs that have been given out, more than 360 million. So I think that feeds on the previous discussion from Mr. Nair about the opportunities here and the amount of work that is available, the amount of lending that is needed for financing green. I'm now going to take a step back and look at the global perspective and some of the key themes we're seeing in risk management globally. Now, the last 4 years, we've conducted a survey of financial risk management globally, and I'm going to tell you some of the findings of the 2021 survey, which covered 78 major financial firms from around the world. And we looked at different aspects like governance, strategy, their risk management, metrics, targets and limits, scenario analysis, and then how they disclose that information externally. And one of our key findings or key things that maybe shouldn't be so much of a surprise was that the tone is set from the top. So the majority of firms have C-level accountability for climate risk. And for most banks, for example, and insurance companies, we found that the chief risk officer is most commonly the senior person who's responsible for climate risk management. So it's being seen, climate change is being seen as a risk topic, and is being the accountability sets at the very highest levels within a risk function. But boards are discussing a whole range of topics, as this chart shows. So climate change itself is the most common topic, which is being discussed by boards, followed by net zero or portfolio alignment, looking at transition risks, but they're also looking at strategic risks and opportunities, and looking also at, for example, the physical risks of their own operations. So boards are engaged across a big range of topics. Now, we also saw that more firms are expecting significant strategic risks and opportunities compared to previous years. And we also saw that the proportion of firms that are anticipating a significant impact on their strategy continues to rise as we look in the future. And we particularly see this over the next 5 years. But banks and firms are still expecting to have big impacts on their strategic risks and opportunities over long timescales. And then as part of assessing which aspects of your business need reviewing, firms need to understand which type of climate risk is expected to have the largest impact on their business. So we asked which of the risk types, transition, physical, or portfolio alignment, are our highest priority. And the firms told us that transition risk, it was the highest priority at most firms, followed by alignment and then physical risks. So if we add up all the pieces of this pie, there were 87% of firms noted that transition risk was their highest priority, 71% alignment, and 47% physical risk. However, we also saw that these risks are equally significant at about a third of firms. Now, whilst firms are looking at the risks, most firms don't believe yet that climate risks are fully incorporated into market pricing. We saw that just 6% of firms think that it's priced correctly, and that was similar to the previous year. Now, firms felt that those firms that did feel the pricing was at least partially reflected into prices said that was in a few areas, such as emerging market sovereign bonds, green bond prices, or a few lines of insurance. Now, we know that for accurately pricing risks and opportunities is really important, and is going to be more important in the future because, as you know, good risk management is all about getting sufficient return for the risks that you're running. So this is an area that we're hoping to see being more evolved, and the pricing of these risks actually being factored more into the products that are being sold. So that was kind of a quick run through of some of our main findings. Now we're actually releasing the next survey on the 13th of September, so in about a month's time. That was conducted this year. And you could also find on our website a case study about kind of some of the trade-offs in India, trade-offs between the climate mitigation and adaptation. And most of the perspective I just discussed was about the impact of the climate on the balance sheet or the bank's profitability. Now, we often speak here about understanding which perspective you're interested in before you do any work. And the need to understand the perspective was reinforced in a recent piece of work we did with 50 banks around the world in conjunction with UNIP, looking at what information a board should see. And this was quite interesting that we found a clear way to present the information is to separate it into balance sheet related and own operations, where the own operations are the emissions from your buildings, the power consumed and the travel. And then the balance sheet risks were further separated into categories like climate risk management, the actual impact on the balance sheet, portfolio alignment, regulatory risks. So this kind of reinforces the messaging that you need to understand which perspective you're looking at. But these days, more and more banks are looking at these multiple perspectives as their understanding and the investigation of climate risk grows. So with that step back to the kind of the global perspective, I'm now going to move on to the audience questions. And we've had questions coming in throughout. So I'm going to ask, I think, the first one to Mr. Nair, because we've had a few different permutations of questions about scenario analysis and stress testing. And when is the Reserve Bank going to start looking at those topics, and what are the expectations for banks? So over to you to give us some views on that.
Yeah, so thanks. I think I already alluded earlier that as far as scenario analysis and stress testing is concerned, globally, if you look at, I think, European Central Bank, Bank of England, and a couple of other central banks have done on it. Most of this to follow what NGFS has told in terms of the scenarios. This has discussion paper very specifically on the aspect of stress testing analysis. You get feedback from the participants and stakeholders, what is their take on that. We are closely looking at the scenario analysis part and trying to work in that direction, but it is early stages as of now, so I would not be able to talk much on that. But we expect that the market participants or stakeholders comment on the aspect of the scenario analysis and stress testing as what is their view on it. Of course, globally, there are different models there, top-down, bottom-up, static, dynamic. There are a lot of permutation combinations there. But we are closely examining it. We are looking at it, but we would want feedback from our stakeholders before we take it further.
Great. Thank you. So, yeah, I think all the, as you say, lots of the central banks are looking at kind of scenario analysis and stress testing and how best to implement it in a way that's meaningful for their jurisdictions. While you're there, I might ask you, actually, there was another question about taxonomy. And I think you also did mention taxonomy when you spoke earlier. Someone was asking, could you give any more information about taxonomy and are there plans to develop or implement a taxonomy?
I think, thanks once again. I think taxonomy, if you look at globally, it is more of a country, a sovereign who drives the taxonomy and not the central bank who drives the taxonomy, if you look at globally. So it is work in progress. As of now, the Ministry of Finance had set up a task force and they are examining various aspects, and one among them was taxonomy. It's pretty much in advanced stage. So once the taxonomy is out, I think everybody would know like what it's all about. But as of now, I think as far as central bank is concerned, we are awaiting for the report to come out from the government of India in terms of what the taxonomy would be like.
Great, thank you. I'm going to ask my next question to Mr. Ghosh. There are a few questions here, actually, I think aimed at the kind of the banks who are doing this side, and the questions about what are you seeing banks doing? I think people are looking for really concrete things to reach a net zero goal. And actually, one question someone I think asked in relation to what I was talking about, portfolio alignment. So that's aligning a portfolio to either a net zero objective or a specific temperature objective. It might be 1.5 or 2 degree or net zero. So yeah, a question to Mr. Ghosh then about what, I guess, concrete actions is the state bank taking, or are you seeing other banks taking to meet net zero?
Yes, I think as we have said in the course of our presentation, I think we have already been taken several initiatives in terms of the green financing, as some of the numbers which I've already given in terms of some of the initiatives in e-rickshaw, the greater fuel initiatives, e-rickshaw initiatives and others. So the bank is already having laid out policy for this transition risk. But the important point, I'll just give you, I think, if you look into these, what the bank is doing, actually, we have around 4 billion exposure to green financing. So we are actually in solar, windmills, small hydro, biomass, waste to energy. So we are there in all these sectors in terms of a transition to a green energy. And we also have system in place whereby that aspect of the risk is considered when we are lending to a particular entity. But having said that, I think currently banks in India also feel there could be some structural changes that could be required in the traditional lending and investment approach to support green financing. Most private sector, public sector and foreign banks have actually indicated that there should be some amount of structural change which could happen, and that's a continuous process. So that's point number 2. The final, I think, if you look into the recent RBI survey, which has been mentioned also by the regulator at the beginning, I think whereby it was a survey was done in terms of understanding whether the banks are having an internal strategy climate risk into their risk management framework. I think that number shows that the private banks, public sector banks and foreign banks are at different levels of perception, and that shows that it's a work in progress. So on the one hand, while banks like State Bank of India, which is basically the largest commercial bank in India, have already put in place a system to mitigate and monitor the risk in this risk in lending. But I think we need to travel some distance as far as the entire banking system goes. Hopefully, there are now talks of rating also entities in terms of these green ratings and other things. And if it comes through, I think we'll be in a better position to address this risk over a point of time. Because please note that the numbers which we have given in the next 5 years, the targeted numbers which is there actually in my slide, are quite aggressive in the next 4 to 5 years. So we have to move towards this target. The financial system have to put in place a more structured and robust framework so that we are able to take this risk into proper perspective.
Great, thank you. And I might ask you one question if we can have a short answer, because I'm very conscious of time. So a question about basis points actually on green bonds. So we've had a few different questions about like basis point difference and why are we seeing a basis point difference on green bonds compared to non-green bonds. Can you give us a quick answer to that, or is that not possible?
No, I think regarding the green bonds, the only thing we can see is that we have actually there has been in the last, I think 2020, and also there has been a lot of green bonds have been issued, and hopefully I think as I said to you, the funding is going to be a major source in this context, because the banks can actually do it up to a certain level. So I think these new instruments like bonds and other instruments, there could be some innovative pricing mechanism and innovative discovery also in the future, because to satisfy the funding needs, which is enormous in this context, my sense is that we need to move beyond green bonds also at some point of time. So maybe next time when you come back, you can see some more initiatives which the banks are doing in terms of mobilizing in this area.
Great, fantastic. Actually, I'm going to draw the Q&A to a close. So I'm conscious of time. We've had a lot of fantastic
And just
questions.
1 second, if I just add, our bank already has a green bond framework. So that provides a roadmap regarding the green bond issuance. And we actually have a green bond portfolio also. So I think this is a very interesting area, and maybe there could be more innovations in this area as we move forward.
Great. I can see you're leading by example, which is great. And as I think both you've both said, there are tons of opportunities, like trillions of dollars of opportunities. So there are so many opportunities out there for bond issuance financing. And one of the things that I'm going to just touch on for a second is that some of the questions also, and some of the discussion was about capability building. So there are other resources available at GARP on our Sustainability and Climate Resource Hub of different topics. And then, of course, as was mentioned at the start, the Sustainability and Climate Risk Certificate for people who want to dig in and get a solid foundation in this topic. So I'm now going to hand over to Dr. Marella Darren to say our final summing up and vote of thanks.
Yeah, it was really a wonderful webcast, which was jointly organized by the Indian Institute of Banking and Finance and by GARP. and all the participants will agree that the topic chosen on green finance and climate risk mitigation in India is indeed a very contemporary topic, not only in India, but as Dr. Maxine said, all over the world. And we had excellent speakers. Mr. Sunil T.S. Nair, Chief General Manager from the Reserve Bank of India, spoke from the regulatory perspective. During the course of his presentation, brief but very insightful presentation, he said about the discussion paper which RBI has released very recently, which included the survey of the banks. And he was categorical in saying that no regulatory entity can contribute unilaterally. It is an effort to be taken by all the stakeholders, by the regulators, by the government, by the banks, by the people themselves, by the companies, and by all the stakeholders concerned. Otherwise, achieving the net zero emission result will be a difficult task, but then it's certainly not impossible, but for the involvement of all the stakeholders. He also said that the renewable energy, one of the major decisions taken by the Reserve Bank is to include the renewable energy as part of under the priority sector lending of banks. In India, that's a very important concept where 40% of the bank credit goes to certain specified sectors as directed by the regulator, and renewable energy is included in that very recently. Then Dr. Ghosh spoke about the economic perspective. When during his presentation, he spoke about the climate profile, India's position, the climate changes which have been observed in India, the temperature rise, cyclones, etc. And he also mentioned that the investment for achieving zero risk, net zero position is quite high. It runs into several trillion US dollars. And he also spoke about the green finance emerging trends in India, the opportunities and the emerging regulatory landscape, besides highlighting the role which SBI has already taken in so far as green financing is concerned. And then Dr. Maxine Nelson, the Chief Representative, the Senior Vice President from the GARP Risk Institute, spoke from a global perspective. She mentioned about the building blocks about climate risk management. Transition risk is a priority for most firms. Climate risks are not being priced. They should be done going forward. And then she also shared an element of dashboard for the banks. After that, we had some good, insightful question and answer session by the participant, which was extremely well moderated by Dr. Nelson. So I would think that there were very good takeaways from this webinar. So on this occasion, I, on behalf of the Indian Institute of Banking and Finance, would like to thank Mr. Nair, Dr. Ghosh, and Dr. Maxine Nelson for sharing their valuable insights on the subject. Another word of appreciation, I'll be failing in my duty if I don't say that, is for the representatives from GARP who provided all the technical clarifications regarding the platform. This platform was new insofar as all of us were concerned, but we are made quite familiar with that. We had mock runs, so everything went off smoothly, and the program was well coordinated. And my own team of my people who worked tirelessly to ensure that the program is well received and well coordinated. And last but not the least, we got good participation from the participants and good insightful questions. So I am a personal behalf and on behalf of Indian Institute of Banking and Finance and GARP thanks. We like to thank once again the eminent speakers from RBI, from GARP Institute and SBI, Dr. Ghosh, for sharing their valuable insights on the topic. Thank you. Thank you once and all.